Okay, good morning, traders, and welcome to Trade the Structure, and welcome back from the long weekend. So we've got a lot to talk about this morning. We're going to have some key levels. A lot of action on Friday night. The market, the US got smashed, and then they actually bounced back yesterday. So there would have been a lot of traders out there looking for those bargains on the open this morning until the US rallied, sort of threw a stick in the works there to rally overnight. So that was led by what it seems this one stock, Elon's takeover or buyout of Twitter. So he bought that, I think it's 44 billion or something like that. And that gave the market a bit of support. Growth stocks were getting bought up. Really, to me, it was just more bargain hunting than anything else. That news on Twitter lifted the Nasdaq, which in turn lifted the S&P, the broader market, and people went bargain hunting into the US close. So it basically lifted the market across the board. There's going to be Europe, which will play catch up. The actual underlying indices, won't look at those, but we'll look at the CFDs. They'll probably be playing catch up on the open, so it might just buoy the open there. But either way, I think longer term we're pretty much it's negative at the moment. If anything, it's sideways at the very least. US markets have broken their uptrends. The big boys, so the Nasdaq, the S&P, and the Dow have all broken their longer term uptrend, so they're out of that trend. Everyone's sort of focusing on harder rate rise than what they originally expected. There's a lot of concerns over in China. There's still a lot of concerns weighing on the market, so that's why you're getting these bigger moves on the downside now. So that's what we're going to be careful of. That's sort of what our risk is. I feel it's more risk to the downside. And these sort of bounces like overnight, everyone will be jumping and saying, look, we're all back in play. To me, it's just a short squeeze. Any shorts that built up from Friday, sort of dragging some shorts. You can see this is the open on the, say, this is around the open of the US. It sort of popped down. Actually, this is a SPY. We'll just look at that. Pushed down, got suckered in some sellers on the open and then squeezed them out. Okay, so it's just a bit of a squeeze, engineer to squeeze out some of these sellers, see if we can get to that level and then roll again. So that's what I'll be looking at. We'll just get onto the down now on the US and we get back over to the Asian markets. So we've got that, the Dow popping up near 34,104. So I think that's key for me today, whether we just flush up and then, start to get heavy again. Market is extended to the upside on that pullback. So is this deep enough pullback to squeeze out enough of the sellers before it resets lower? Or are we just going to keep grinding higher? Okay. But like I said, that's a key level break there from Friday night. Key level break. It's come all the way back. So we're retested into that zone. Whether we start to, drag in some buyers before squeezing them out and pushing back down again, yet to be seen. The tech, this is the Nasdaq. It broke that level at 13,740. It has had a bit of a retracement, nothing like the Dow. It will be interesting to see. I don't think that Twitter news is enough to really drive a whole market. It's ridiculous to think that, but it seems to be that was just an excuse for some buying yesterday or overnight. So I don't think that's going to flow on. I wouldn't expect it to flow on into major move back up in tech and the S&P and the Dow, but we'll see. Funnier things have happened of late. So we've got key resistance holding the market down at 14,286. We've broken that level at 13,740. Where we start to get heavy again and we start to extend on those losses of this move down into 13,025. We'll wait and see how that plays out tonight, but that's a key support zone through there. All right, so they're the two main indices we're looking at. We'll get over to Asia. Sorry, we'll get over to the Australian market. So that was the SPY. You've got the 5-minute chart here. The market pushed down. So we've opened up here after a break. We closed Saturday morning and had yesterday off. Opened back up for the night session and pretty much went down, went sideways down. So it was really the market sort of just following the European markets to see what they do. We had a bit of a flush here. That was around the start of the US session and then sell off. Basically lockstep with what the US was doing before we bounced. Okay, we found some support at 71.91, bounced straight up through that anchor to the downtrend at 72.59. So at the moment, we're in sort of pullback mode of this leg down, so squeeze mode. So I'd ideally like to see a sort of flush into that 72.59 and a pop up. But I wouldn't be surprised if we sort of grind straight up and then fade into the close. Whether or not we can get up from, say 73 even to 74, another 100-point rally on top of that sort of bounce from last night is yet to be seen. It could be just some bargain hunters continue to drive that market higher. On the longer term, only a 15-minute chart, you can see that action is well and truly on the downside. All right, so and it's broken this zone through here, which is to me it was a key level. If we just go back out a bit further, we just go to a 4-hourly chart, and I'll delete all that there. The 4-hourly chart doesn't look too good. Okay, we've got major failure up here. at the highs, which is pretty much the all-time highs. We've got some lows in play there, and at the moment, the way we broke that level there is around 74.34. We smashed through that level. We could be just coming to retest that before heading all the way back down to 6,900. I don't know what's going to happen, but that's what I'm sort of preparing for at the moment. We could just fail around this zone here. We might just gap close there, sort of fluff around here today, and then drop. But either way, I think longer term things are looking decidedly worse than they did a little while ago. Okay, so over to Hong Kong. Now these markets have been in a downtrend for a while now, and been under pressure. Now this grind back up, along with the US took off, bounced quite hard. The Hang Seng, that's what I'm trying to say. Hang Seng didn't, but they can tend to do that a bit. They don't bounce too hard. People come in, they're still a bit negative. It sort of flushes down on the open and then bounces, has a good bounce later on once the share market's open. Just depends what your stockholders want to do and how this market's been engineered, I guess, for the open. So engineering this kind of thing, a bit of a grind higher. We could, two things I sort of expect: a bit of a flush higher through 2114, and then some lower highs to take us back down to that 19715. Whether we get all the way back down or whether we just get a short on play before we start to build a major higher low, something like this, is yet to be seen. But if we do sort of flush low on the open, just watch out for a deeper pullback. Okay, back up again to squeeze out some of these sellers from the last few sessions. But you can see well entrenched downtrend at the moment. It's just because of what happened in the US overnight and what's happened in the previous session yesterday in the Asian markets where they got hammered. There could be some bargain hunters to try to find some support or to build some support, hold the levels, soak up some selling on the open, and then see if we can ramp it higher. You'll see that on the Nikkei as well. You can see that move down there through 26,592, the previous lows. It was soaked up below that level quite well. Okay, so it was soaked up really, really well after a big sell-off from the previous session. Soaked up when the US open, bounced. They got the big squeeze on these sellers. So whether we hold this level at 26,930, I think this has bounced back a lot harder than Hang Seng. But if we can hold this level, I'd rather see sort of flush up to that level. And if we start to get lower high, I'd be looking for shorts. Now, if we start to hold that level, we're looking for an extension on that move up. We could be looking at 27,227. Okay, so all the scenarios are built in, but that's kind of the one I'll be biased off, working off a key level. I don't like this sort of flush down, and then you're looking for a lower high in the middle of nowhere. Otherwise, you've got to get this. If you get this kind of price action where it pulls back to build a key high low, you just have to wait for that price action to play out. All right, we get over to Europe now. We've got the DAX. You can see this level through here. It's held up off that level, 13,985. It's a key level. And it's, that's off a move about here, off a move down from about 14,590, for instance. Okay, so you got these minor little levels that got retested, held. This level through here broke, and we could be just looking to test that 14,183 zone. We might be looking to pull back there, just like we did here. Okay, bit of a pullback to that level, retest, sell off. Bit of a pullback to that level, and we get a bigger sell off. But either way, that's at the very best sideways action. Okay, I would feel that if the US starts melting down again, that's going to just completely get a run on and start to heading south. If you go over to the UK, that grind there, we spoke quite a few times about that grind up. It's getting supported until we got to this level around 76.55, and then you got this massive sell-off. Okay, big sell-off, busted through 75.39, pull back, retested that sort of breakout area at 75.96 before we get another good leg down. So at the moment, we're just retracing some of that leg down. Don't know where we're going to. If you sort of look left, where could we go? We could be up to test this zone through here around 74.87. We're sort of past these areas here, but you've got these little minor high lows that it's working into. So it's just trying to find a zone at the moment where it could go to. And like I said, if it's going to bounce back on the open, this is already it's already factored in what the US has done after the index closed. So the DAX and the FTSE, they closed early, but the index, you see if they will keep going. So it's kind of going off what the US is doing, which is pretty much around this zone at the moment where it closed. So it could just extend on that with a little pop-up, 74.88, but a lot of that move up could be factored in from the open, and then we'll wait and see what happens. Okay, we'll get over to the currencies now. We'll just go to the other charts. That's US dollars. The US dollar's been powering higher. It's been pushing higher. We sort of stalled here, had a bit of a pullback, which we discussed. We got that, nailed that. It's just some news come out, some more inflationary data. It was a lot stronger than expected, and the Fed's come out and said we're going to combat this a little harder than what you expect. So we're going to start to really combat inflation with interest rate rises, pretty much they're not going to let it get out of hand. So that's why the US dollar is adjusting and adjusting higher for, I guess, a more aggressive Fed. Okay, Fed Reserve, and that's been just pushing higher, being pretty consistent, and that's obviously pressuring the currencies. Gold took a beating, which we'll look at in a moment. That took a bit of a beating from that US dollar rally, but that rally is still in play. Okay, so at the moment it's still in play. It is getting a bit extended, but you can see the MACD every time it sort of pushes up, gets extended, it has a bit of a pullback, say on the MACD, but price consolidates and it goes again. So we could just be getting more of the same, bit of a pullback as sellers come in, they don't get anywhere. It consolidates these highs and goes again, starts to rally into new highs. Okay, so that's what you'd be looking for, which would mean that things like the euro, pound, Aussie, yen, well, not so much the yen, but the euro, pound, and Aussie under pressure a bit more. And it's showing when you're looking at some of these charts, you look at some of these prices. Okay, this is the euro here. So the euro's got knocked down. We're looking at a bit deeper pullback at this stage before we broke down through 108.18. Didn't really go anywhere. It went smash through that level, retested 108.18 from underneath, and then we broke through that 107.70 lows, okay, which is a previous low, smashed through that, and now we've sort of come in and already retested that, so it could mean that we're going to extend. Now, if you look at the bigger picture, if I just get onto this here, the bigger picture, that's a big move down. That's pretty much lower highs all the way, lower lows until we get down to this level at 108, was that 18, bounce back, had a corrective phase back up to here, and then we were into our secondary phase down. So if that's the case, there's a lot to go, and it looks like we could take us down to that 105.11 area. So for me, it's really to see what happens on that, bit of a pullback, see if it's holds the MAs and get a short on, okay, and then, which would mean that that US dollar is going to do what we said: consolidate, go higher, consolidate, go higher, okay, and continue to pressure higher because Europe is not looking to raise rates anytime soon. They're happy just to weaken the currency, and they're not looking to raise rates like say the US is. Aussie market, or the RBA will, BOE looking to do the same. Okay, so they're not looking to do that at the moment. Yeah, they're talking up inflation, and I think they're more concerned with what's going to happen with Germany and the oil embargoes, because that could really hurt Germany, which in turn hurts the European Union. All right, so these oil embargoes, energy crisis still over there, from Russia. Looks like Macron has got voted in again, is still looking to pressure those embargoes on the Russian oil, which Germany doesn't like, and they're not taking too kindly to it. But it could cause a recession. They're talking up. That's what they're saying. But obviously they're going to overblow it again, pump it up a bit, but cause a recession in Germany, which in turn is basically the European Union at the moment. So that's why we're getting a bit of a sell-off into the euro. I would expect more flowing into the DAX as well to the downside. Pound. So pound, you can see that, good move down for once it broke down through that 1,300 area, that support, which we've had marked up for a few days now. Broke through there, basically didn't look back, come down to a daily support zone around 127.25. So it could start to get choppy in here, could keep flushing the lows and then bouncing straight back again. So I would expect after that kind of a move down, we need to squeeze out some of these sellers before we continue, okay, continue on the way down. Or we just start to, big pullback off that level, have a good retest into it and a higher low, and start to work back up to the 130 even. Okay, but that's had a big move down. Really got pounded as that US dollar's heading higher. We go over to the Aussie. Aussie, same sort of scenario. That US dollar strength has killed it, and we talking about this uptrend for a while. This white line here, this raising support line, it's dynamic support. It sort of pushed into that zone before we bounced, and it's come back in there, and it just basically smashed through that level. So that's wiped out quite a lot of stops, come straight back into this zone at 71.66. And now we're looking to see, is that going to hold? We flushed through, we've taken out some stops below it. Anyone that's sort of buying off there had stopped below it, just been stopped out. Whether or not that is going to continue, if it starts to grind its way back up here, more of a grinding action, I'm looking for that lower high, something like this, and an extension on those losses down to 70 or 70.15, 70 even, say, the whole number. So really today it's just looking at the Aussie to see if that's going to hold. We might just get a bit of a push into that zone before we start to get a rally. But if the US dollar doesn't do too much, don't expect the Aussie to do too much on the upside. Okay, the US yen. Now, interesting this one. You've got all these. That's 130 even is what the BOJ is talking about. Okay, they're looking at defending that. If it gets up there, they don't want to, not going to muck around. They're probably going to intervention of some sort, which is why the market, after such a big rally higher, this rally high is tentative anywhere up there, and it's everyone's waiting for that big short to kick off. With the US dollar rallying, should pressure, but then you've got also some safe haven yen buying, which is sort of keeping that in that range between 128.78 and 128.05. Okay, so the buying into the yen's offsetting that buying into the US dollars at the moment, sort of heading sideways. So it's chopping around here. If this starts to hold and it starts to unwind through 128.05, there's going to be a good short, and it's going to take maybe one foul swoop down to 124.95 or so. I think there's some numbers coming out in Japan today, so just keep an eye on that. It could be the trigger. It may not be. All right. So with the US dollar rally, the US market bounce, if we start to see some buying, bargain hunting into the share markets today and again tonight, they're going to get some safe haven exits. Those safe haven buying into the yen is going to get cool, and you've still got that US dollar buying, which could mean that there's going to be a bit of an unwind. Or probably, sorry, we're not going to get to that. We're going to get a bit of a pop up to the 128.78. But I'm looking for some more serious yen buying, maybe easing off in the US dollar, and that to start to unwind quite a bit. I think that's the trade that everyone's waiting for at the moment. Looking at gold, we'll get gold, oil, and then copper, and then we'll get over to some cryptos. We'll finish it up there. So gold, like I said, got beaten. Okay. Obviously, everyone expects that the gold bugs expect it to be inflation hedge. We've got inflation. We don't have any love into gold. Okay, it's dragging in a few buys, suckering in, and then coming down and getting smashed. Okay, so basically, if it's going to be a hedge, you wouldn't expect this kind of a sell-off. Okay, it's maybe that it's getting thrown by the strength back into the equity markets. Because normal cycle would be pressure into the equity markets as you've got an inflationary cycle, a rate rising cycle. Now we're going into that. Maybe it just hasn't kicked off yet, and gold's just waiting for it to kick off. But either way, longer term, we've got this big move up to the highs around 2070, 2070. Big sell-off here. We've got this levels held a few times. Big corrective move up to say 2000, even just below 1995 or thereabouts. And then this could be the secondary leg down. So really, all eyes are going to be on that 1896 area today. Coming sessions into Europe tonight, to US tonight. If that starts to get, which I would expect, if it wants to break, I would expect this to sort of grind higher. Okay, then what it does, it drags in some buys. They look like it's going to hold again, drags in some buys, and turn around and squeeze them out with a savage move through the level. And then there's enough buyers built up to get squeezed out. There's going to be stops under that level to trigger further selling. There's going to be stop entries where people are shorting it, and then stops from buyers that got it wrong. Okay, but they're all selling fuel to move into the market. So that's what I could be looking at, just to see if that actually does play out. But you really need to see some action first. You need to see some sort of, I don't want to see a flush of the level and a bounce back, which we could do, but I'm more inclined to see the sort of push higher, drag in some buys, and then you sell off, which I've got this marked up there, but that kind of thing, because before it really breaks these lows at around 1890, say, for instance. Okay, so that's gold, oil. That sort of you fall away from those highs at 130 thereabouts. It's around 130 or thereabouts, 126, 129. Big sell-off here, bounce back. We've got another sell-off into the level, held again for a second time at 93.93, pushed up to 108.30, and now we're sort of grinding away. We're back down at the moment. So for me, we are heading back down to that zone. It's all about whether we're going to get some sort of consolidation above the level and holding for a key high low to jam up and through 105 or 108 and back through these highs, or are we going to continue to grind down? So at the moment, it's looking like that's your push down. This is your pullback. We might consolidate here, maybe below that zone, somewhere around 100 even, sort of chop up through here and then get another sell-off down through 93.93. Okay, but we'll keep an eye. We need more price action to play out. But it's kind of those two things, whether you're going to get something like this, another sell-off down, or then you're going to start to chop around here and start to hold up. We hold up a key higher low above 93, which would mean that's because that's a double bottom that's being supported. So you're looking for a major higher low. If we get that, we could break out this downtrend, this contractive price action down, and we're looking to take out some levels on the upside. Excuse me. Copper. So copper's copped a bit of a beating. We're looking at this level for a while. Okay, so that's actually moved down, popped up, consolidated for quite a while, through this zone. And we're looking at that as being one of two things. On the daily chart, it's more of a higher low going to hold and we're going to jam up through the highs, or is it a key lower high? Because really this high was into a daily resistance zone. It's a retest of that level and it failed. It failed off that level. Then we bounced back. Okay, it's still holding the uptrend and we got consolidation through here. And then we're looking to either, like I said, a bounce, off the level, that was a higher low and we just jammed straight up through the highs, or we fail. And as it turns out, we failed off that level. So it was looking like we were talking about, I think, on this on Friday, that inside level hold, in fact, starts to hold when you get pressure. It looks like it's going to lead to a break through the lows, which it did exactly that. And we pressed into this low at, say, 445 even. All right, so now I would expect this downtrend that should move up, massive consolidation. I would expect that to get a bit of a run on to the downside and press down to 129.50, these lows here. Okay, that's what I'd be looking for there. Now, over to just to finish up on some, we'll look at Bitcoin and Ethereum. So they're pretty much going lockstep with the US markets, with their share markets, and that was about when it bounced. So it bounced around 130. Sorry, it was at 730. Bounced somewhere around here. US, so it was still in a downtrend. We got this, then we started to get the US bounce, which bounced up off this support on Bitcoin anyway at 38,550, and Ethereum looks much the same. Now we're coming to a level here at 4,600. I look for that sort of. I want to see a flush of that level, then maybe some lower highs coming back down. I think with the US bounce last night, I do think it's a short squeeze as opposed to re-establishing of a long trend coming back into play, because I think that longer term, that long trend's over. Okay, we're at the best. We're going to consolidation sideways, or we're going to start to roll over. Okay, but because it's such a big time frame, it's going to be choppy. You're going to get bulls every time we get bounced, like overnight. Bulls are getting all excited, they're jumping back in. But then you get the bears start to dive in once you start to sell off again. But either way, on the bigger picture, it could just be some major chop before it starts picking a serious direction trend. Okay, so that's Bitcoin. Like I said, just looking for that level. That's the interest level today, 4,600. On Ethereum, we go over there, same sort of scenario. You saw that bounce off that 2776 area. Bounced back here, started the European session, and then kicked on nice and strong once the US opened, took out the anchor to the downtrend. So that was about here, just at the start of the US session. Took out this little zone in here. This is the anchor to the downtrend. You can see trending down, lower high, pressing down, took that anchor out, okay, consolidated a bit, and then took off to 30.31. All right, so for me, it's what happens around this zone at 30.31 or up to 30.51. It could just have a bit of a spike into that level, and then I'll be looking for a lower high. Now, if it obviously spikes in there, consolidates around there, look for an extension on that uptrend to 31.60, but I don't think it's going to do anything to the US opens. It's going to follow. All right, so pretty much that's it for me, guys. We'll finish it up there. We're getting a bit over that 20-minute mark, so yeah, thanks for joining me. Just keep an eye out today. Like I said, there is, we did get that US bounce. Like I said, I think it's a lot of it's more of a short squeeze than anything else. It'd be interesting to see how the Asian markets go today, whether we get some bargain hunting them off the lows, or whether we sort of, flush up, dragging some excited buys on the open, and then we start to sell back down again. I think the bigger picture, the concerns are still there. Okay, inflation pressures, concerns of Asia, concerns of Russia, all these sorts of things weighing on the market. I find it very hard for the market just to turn around and bounce into that negative news. Okay. So yeah, be careful of what you're doing there. Make sure that your risk is first and foremost in your mind when you're placing trades, and obviously with your bigger portfolios and your shares, just make sure you know where your risk is if it does start to melt over. Refer to the blog post I put out yesterday. Okay, I've got all the different charts, all the major indices that marked up levels I'm looking at on a bigger time frame charts, the dailies. And like I said in there, just make sure you know exactly where your risk is for any of those if you're trading into your shares. But if you're into index trading intraday, again, you've got to know where your risk is when you get it wrong. If it does have a bit of a pop higher and you do go long, just make sure that you've got in the back of your mind it could easily roll. Okay. So anyway, guys, thanks you very much for joining me. If you do like what you hear, it'd be great if you can subscribe to the YouTube channel. Leave us a like on that, and we'll speak to you again soon. Cheers. Bye.